These are the 7 most important actions that I take before entering any trade. Number 1, I look at the volume. People have heard me say this over and over, and if you haven't heard me, you need to hear it. Volume is like gasoline that goes in your car. If you don't have gas in your car, you're not going anywhere, and that's exactly what volume is to the stock market. It is what propels the market forward or down, whichever direction you're going. Buying volume, of course, being going up. Selling volume, of course, going down. In this instance, we're looking at Ford, and I am looking for selling volume, which is pushing me down. I'm looking to short this thing. So if I'm looking at this, I say, okay, everything's starting to look really good for a trade right here. I see that we kind of hit this all-time high, or 52-week high, I should say. We kind of had this head and shoulders pattern that's starting to develop, and I am getting interested in going short on it. The trend over here, from a swing trading perspective, is looking pretty good. I'm pretty happy with that one, okay? So what do I look at next? What is number 2? Number 2 is engulfing candlesticks. I'm looking for a buy signal. When I am looking for something to buy, I want to give myself the highest probability to make money. And if we're shorting, the engulfing candlestick is pushing down. Let me zoom in really tight on this one so I can draw this in for you. So you see here that we have this little wick right here. Let's get rid of this arrow. You see this little wick right here. This means that the stock price came to the bottom at some point during today, but now it's creeping back up. In an ideal situation, what do I want to see? An engulfing candlestick is this. It's moving to the bottom and really staying on the bottom. So I have 2 things going for, well, I don't necessarily have it yet, but this is what I'm looking for. So number 1, do I have the volume? Yes, I have the volume. The average shares traded here per day is about 50 million shares traded per day. It's 10:48 in the morning. I almost have 22 million shares traded. Volume is good. Number 2, the engulfing candlestick. Did I get the engulfing candle today at one point? Yes, I did. So what am I going to look for? I'm going to see if it can fill itself out through the rest of the day and look like this. The volume should propel it to that point. Number 3, what are we looking for next? We are looking for any type of resistance or support levels. And the first thing that I always look for, and I'm actually just going to pull up the daily chart just so we have all the detail. I look for the major moving averages. The first thing I look for, are we clear of all major moving averages? In this instance, yes, we are. But that's not the only support resistance that I look at. Those are just the obvious ones. We are clear of all of these. I don't have to worry about anything. Now, what would it look like? It would look like I'm going to draw the 100 in. Let's say the 100 was up here, and we were just running right into that 100-day moving average. Let's say this line was up here. Well, it's going to say, this is going to get down to this line. It's probably going to bounce back up, and it's not going to be able to drop below the 100-day moving average. So that's what I would be looking for if it was a moving average, but it's not there. So let's see. Is there any resistance built in here? And this is when you just zoom the chart back. You zoom it out, and you kind of just start drawing in your own line. So here's where our stock price is. Yeah, we have a little bit. We have a little bit of consolidation in here. We have some, but it's nothing major. It's nothing major where we're consistently, if it was, it would look like something like this. The stock price would get there and it would fall. The stock price would have gotten here and fallen and here and fallen, and it just couldn't break over that level. And we would go back for a couple of years, but that's not what we have. So I'm not worried about that. So 3 things are clear right now: volume, engulfing candlestick, and any type of support or resistance. So before I move on to the next big action, this is a checklist that you will receive if you are in my Patreon community. It is $25 a month right now. The link is in the description below. Guys, a checklist is so critical. This is still something that I keep on my phone and I look at all the time. Why? Because you miss things. You get so into the routine of things. You might say, oh, well, I'm going to go at something and I forgot to zoom the chart out. I forgot to look at where the support resistance lines are. And you buy something or you sell something and you're like, well, why did that not work? Why did it just instantly hit the price that I sold short at and it just went the other way on me? Well, maybe you forgot to zoom the chart out to look at any support or resistance levels. It's very important to do. A checklist is super important to have. Have it taped on your desk, have it on your computer, whatever. You'll get that if you join the Patreon community with the other great traders that are out there. It's $25 a month. Again, the link is in the description below. Let's go to number 4, the bid-ask difference. A lot of people are not going to say this one, and this is where a lot of people get burned. I get this comment all the time. Mo, every time I buy a stock or every time I sell a stock short, it goes the other direction on me. Why does that keep happening? Because you're not looking at something called the bid-ask spread. Right up here in this corner, And you can find this anywhere. If you go on your iPhone, you look in Apple, it's going to give you a bid-ask spread. It's always there, but it's just so overlooked. The bid-ask spread tells you the difference between what the market maker wants you to pay and what the general market is wanting to bid on that product. This is a market, guys. There's a buyer and a seller, and there has to be an agreement on price. In this instance, this is a $13.75 stock. If you have a difference of more than 1 cent, you should not be buying this. Let's say that this was 50 cents. Well, here's what's going to happen. This is 50 cents. Somebody's going to come in and they're going to say, well, I want to buy this for $13.75. And the guy who's making the market is going to go, well, I want this to be $14.25. And this person's going to come in and they're going to place a market order. Very important. They're going to place a market order. So they're going to buy it at whatever the ask is. Not what they're bidding, whatever the ask is. And instantly, you're going to get assigned the shares at $14.25. And then what happens? The market maker is going to drop the price down because he found the sucker in the room, and that was you because you didn't look at the bid-ask spread. And all of a sudden, this is going to drop down, and it's going to go to, call it $14. And then people are going to start rushing in and they're going to start buying it or selling short, whatever it is. And you're going to get burned. And that's when people say, every time I buy something, it falls on me because you're not looking at the bid-ask spread. I call it the manipulation marker. It's very obvious. Just don't buy things when the spread is too vast. I always like to look at 1 or 2 cents. Number five, and I'm not putting this in any general order, guys. This could easily be the most important one. There's often times where I look at this and say, yeah, this is the most important one. It's your trend. The trend is your friend. The trend drives everything. But if you don't have all 7 of these, you can't execute the trade. So it doesn't matter what order you put these in. Make sure that they all check the box. The trend is extremely important. I'm not even looking at a stock if the trend isn't there. And in this instance, it is. Remember, we're going short on this thing. We want the stock price to go down, so we're looking for the trend to be going down through the sweet spot. Breaking 80% with the red line and yellow line and moving in the downward direction. The trend is your friend. As long as you have that going for you, you can execute the trade. What you don't want to see is something like this. Let's say all other 6 are looking good, but where's your trend? Your trend is going in this direction. Well, that doesn't make any sense. You can't short something if the trend is going against you. That just doesn't make any sense. You need to make sure that the trend is going in your favorable direction to the type of trade that you want to execute. Number 6, patterns. Patterns are a little bit more intricate, but you should not be trading if you do not have all of these tools under your belt. And by patterns, I mean head and shoulders patterns, tweezer patterns, ugly face patterns. So if I'm looking at this one, you heard me mention very early in the video, I see a head and shoulders pattern here. Head and shoulders are very bearish signals, and that's great for me because I want to be going short on this thing. So if I'm looking here, I have a head, I'm just going to draw it in, and I have a shoulder, and I have a shoulder. And what typically happens after a head and shoulders pattern is created? Well, this is how they are created, first of all. The stock price moves up, it pulls back a little bit, it hits a peak, it falls back down, it kind of hits another peak, and then it continues to fall. And the movement of the question I just asked, what happens? Well, they move down like this. So for me, shorting forward right now, this is absolutely perfect. Now, if it was another stock, I'm looking for an ugly face pattern. I'll just draw one in here. So it would look like something like this. You have a stock price that just continues to move up and it hits a peak. And then the stock price continues to fall, but it doesn't fall all the way back down here. It starts to creep up again. And this is going to take some time. And eventually you get to this high again. And what happens? Well, you can't get over that high. Now, what does that look like? Well, it looks like kind of an ugly face. Here's your, and I call it ugly because what's about to happen is ugly. This is kind of that face that's drawn in there. Now what happens next? Well, this just continues to fall. It's almost the same thing as the head and shoulders. The result is the same. It falls like this. Now a tweezer pattern is something else you need to look for. Engulfing candlestick, but what's on the top of it? A long wick, meaning that the stock prices moved up here during 2 consecutive days. And if that happens, it's a very bearish signal. What typically happens the next day? The stock price changes in direction. So these are just different patterns that you need to look for. Number 7 is news driven. And this is very, very important. You need to know when your company is reporting earnings. And this is a trade that I was actually looking at on a live stream today with members of YouTube and my YouTube community. And I actually didn't execute the trade. I was about to execute this trade, But I was running through my checklist, and what happened? Boom, right there. When does Ford report earnings? Ford reports earnings tomorrow. Today is July 23rd. Tomorrow is the 24th. They report in the evening. Therefore, I am not going to enter this trade. Why? You cannot be in a trade during earnings. You are going to get burned. Sometimes it's going to work out for you and you're going to feel really good, but that's probably the worst thing that can happen. Why? Because you're going to think it's going to happen every time. Guys, if you're going short on this and this thing drops down here, you're probably saying, oh man, I made a great trade. This thing moved all the way down. I'm really happy. Well, I'm going to say this to you out of experience. The more times that you're in a stock during earnings, it's going to go the opposite direction on you, and it is not a good feeling. It is really, really not a good feeling. Even if they beat, they can beat. It's what the market perception is of the company. It's what the forward-looking statements look like. Earnings are a total crapshoot. I beg you, do not trade if you are going to sit in earnings. So what do? Well, one, you don't execute trades around earnings. If you are in a stock and you're running up to earnings, what do? You just reduce your shares down. Let's say you have 100 shares of something. Bring it down to 10. Bring it down to 25. Let earnings happen, then reassess. If you need to enter it again, go for it. If you don't, then you don't. And that's just how trading is going to work for you. So these 7 things are critical for you to be a successful trader. So if you want to see a trade that I checked off all 7 things and actually got into the trade and executed it and moved forward and made money on it, click this video right here.